Let's get some reaction. Economist at Stellenbosch Business School, Professor Andre Roux, joins us to expand on the conversation. Professor Roux, a very good evening to you. Thank you for your time. We've just listened to the Reserve Bank governor saying that their forecast model sees further easing of rates in future, stabilizing a bit above 7%. What does it mean for the cutting cycle?
Yes, good evening. Good evening to your viewers. I think going into this meeting, the only real question wasn't so much whether rates would drop, but by how much. And, given the very latest release of the inflation rate, I think in some circles there was hope of a 50 basis point drop. But as the governor pointed out very clearly and eloquently in different ways, that might be a little bit premature, such a sharp decline. So 25 basis points was probably on the cards, has been for a number of weeks. But as he pointed out, inflation expectations remain very positive going forward. And all things being equal, we should see a few more declines. My bet would be at this stage 3 more drops of 25 basis points each, moving into next year, obviously. One might ask, why not more significant drops? Well, over above the points you mentioned there, we must also bear in mind that interest rates internationally might remain higher for longer than we might have thought just a few weeks ago. And if we were to lower more rapidly than elsewhere, you could see more pressure on the rand, which in turn could bring about more imported inflation. I think if we look at inflation elsewhere, especially America, the election of Donald Trump and his stance on import tariffs, for instance, that could raise inflation in America and prompt them to hold back on interest rate declines. Probably also explains why the rand, not so much the rand has strengthened, but weakened, but rather why the dollar has strengthened in recent days. He also pointed out quite rightly that with or without the election results in America, the world situation remains very volatile. We never know what the impact might be on the oil price, for instance.
Yeah.
So I think he's erring on the side of being conservative rather than relaxing too quickly, too prematurely.
Yeah, with a lot of caution in the decision that was taken. The prime lending rate is now at 11.25%. The second cut, is this second cut going to make a significant difference at all to the high cost of living crisis that many South Africans are currently facing and battling?
Look, significant is perhaps not the right word.
Yeah.
It's all very relative, but any little bit helps, obviously. At least it signals that the worst might be over for especially middle-income consumers. They're the ones who are mainly affected by interest rates. Let's spare a thought for the poorer members of society. For them, on the other hand, high inflation is the most difficult thing to contend with. In fact, for poorer members of society, inflation is probably higher than the average for the country. So for them, in the longer term, if a high interest rate stance helps to bring down inflation, that's good news for them. As is always the case with policy, you can please some of the people all the time, all the people some of the time. You can't please all the people all the time. They're going to be winners and losers in any kind of policy decision.
While the risks are seen as pretty much balanced, I mean, the governor has warned that given the mixed data outcomes, it's possible that near-term growth could fall short of the current projections. I mean, you may have touched on this slightly, but how best should one interpret that word of caution?
Again, I think one has to consider the fundamental mandate of the central bank. Its constitutional mandate is primarily to keep inflation under control. It does not say specifically the Reserve Bank is responsible for growth and employment, etc. The idea is that by creating a very stable, reliable, solid monetary situation that will facilitate longer-term sustained economic growth, etc. So again, and let's bear in mind as well that the Reserve Bank is one of the few entities in the last decade or so that has managed to stick to its constitutional mandate without fear of interference. And let's be very grateful for that. It makes it an exception to the rule in these difficult days. So I think they have to be admired and have to be supported, even though some decisions might be unpopular for ordinary consumers.
What opportunities can indebted consumers look at during such a cycle?
Well, I think, I mean, I'm not a financial expert, financial advice expert, but I think some of the well-known factors, for instance, if you do have a bond and you've been paying X thousand rand for the last couple of years, stick to that particular payment. In the long term, it helps you to pay your bond in a shorter period. That's one of the most common kind of examples of benefits we have. What one would not like to see is that people go on a slight extravagant spending spree driven by credit because credit is now cheaper. And by the way, one of the reasons for perhaps not introducing a sharper decline today was we are on the verge, on the brink of the so-called silly season, the festival season, where people at the best of times tend to go a little bit overboard. And a further drop in rates might have encouraged that for all the wrong reasons.
Yeah, absolutely. Some sound advice there. Thank you so much for weighing in on the conversation and speaking to us this evening. Expanding economist at Stellenbosch Business School, Professor Andre Roux, speaking to some good news, of course, on the back of Reserve Bank Governor Lesitsha Kganyago's decisions.